Hey guys, Mike here. So obviously we got the Fed pump or bump or whatever you want to call it when Jerome Powell spoke today. Remember I said yesterday he can say some things that could send the market higher, and so I'm going to show you the question or his answer to a question that sent the market from red to green, and then another answer which I think was more important to a question about decreasing the Fed's balance sheet, which is at a whopping $9 trillion right now, which is double what it was the first time they tried to decrease the balance sheet, and that one sent the market even higher off that answer. But I'm also going to show you how some people said, you know, this was going to happen anyway today, no matter what he said, because of something that happened on the NASDAQ chart yesterday. And I'll show you that. And then at the end, I'm going to ask you a question. If it's your field of expertise, great. But I just find it mind-boggling that this is what's happening right now. And I'm happy about it, but I just, you know, don't know how much longer it can continue. And so just curious. I like getting your thoughts on stuff and your opinions and stuff, because a lot of you guys know a lot of stuff, so I enjoy that. And so if you get anything out of it, hit the like and subscribe button. I really appreciate it, guys. And let's go ahead and get into the first question that sent the markets higher, which was, you said you're going to fight inflation, try to get it under control with the tools from the Fed. So one, how are you going to do it? What's the time plan or schedule on this? And then are you going to have to adapt or be able to adapt with the changing that's happening with this thing that keeps spreading across the globe and will not leave us alone, it seems, okay? And so here's his answer to that question.
You know, we're at a place where unemployment is now very low, historically low, and inflation is well above target, and the economy no longer needs this very highly accommodative stance of policy. And I would expect that this year, 2022, will be a year in which we take steps toward normalization. That will involve raising the federal funds rate. That will involve ending asset purchases in March. And perhaps later this year, depending on the run of things, we would also see ourselves beginning to allow the balance sheet to shrink. So that's what I think that's the broad picture of what I see happening. The committee hasn't made any decisions about the timing of any of that, and I think we're going to have to be both humble and a bit nimble here. If you go back and look at where we were a year ago today in the economy, vaccines were arriving. I think that in my thinking there was the idea that that'll really help us get past the pandemic, and it has helped a lot, but yet we're at all-time record cases and approaching record hospitalizations nationally. So the thing has stayed with us longer, and I think we're going to have to be open to the changing environment, and monetary policy is going to have to adapt as we learn more. And then we're going to learn a lot about the path of inflation, particularly as it relates to these supply-side blockages we've had over the course of the first 6 months of the year and every month, really. And
of course, stocks like this answer, at least the computers did, because all of a sudden you see all these tech stocks, Peloton, Lucid, that's XPing right there, Upstart, Teladoc. Look at the percentages to the right. These things are going up, right? Coin, Neo, AMD, Marvel, Upwork, Square finally got some love. Riot, because crypto started going up as well. DraftKings, Open Door, Pinterest, Palantir, Twilio, Mara, Bob is still going up, Uber.
What we're seeing is an economy that functions right through these waves, and my colleagues and I see that, and you see that every quarter we write down projections of interest rates. They're individual projections. They're not a committee plan or anything like that. But broadly speaking, all members of the committee see interest rate increases coming this year. The median was 3. But that's going to depend on data. It's going to depend on the progress we see on the supply side, the progress we see on inflation. And we honestly don't know. There's risk on both sides, really, on growth and potentially on inflation as well. So we're going to have to be just very attentive to what's happening in the economy and willing to adapt pretty nimbly our policy as we go through the year.
And so let me know in the comments if you can see where the magic was in any of those answers that would just make the market feel really good, because that's the exact same stuff he said in December. It really is almost like no different. I think he's reading from the same speech. And so, but hey, like I said, the market's going to react how the market's going to react, right, to these kind of answers. And so the other one, the more important one, he elaborates on the decreasing of the balance sheet. This means they would either be, letting the bonds, the trillions of dollars in bonds they bought just kind of run off their balance sheet, or he's asked here about selling them to the open market.
You said earlier to Senator Shelby that you think the Fed could begin the process of normalizing its balance sheet later this year. Can you provide us with a little bit more clarity on this process? How soon you think this would begin, and whether you'd consider actively selling securities rather than just letting them gradually run off the balance sheet?
So this is we had our first discussion of this set of issues at the December FOMC meeting. We'll talk about it again at the January meeting in a couple of weeks. Haven't made any decisions. This time is going to bear some similarity to what we did last time, but it's going to be different too, and that's already clear in that we will have the ability to move sooner and to move a little faster than we did last time. So more clarity is coming, soon on that, but I don't want to get ahead of the committee. In terms of selling assets, we haven't made any decisions on that. We didn't do that last time. We never ruled it out either. Mm-hmm. So it's just something we'll be looking at. The balance sheet's a whole lot bigger this time, and also the duration is shorter. So it's a different, and the economy is much stronger. So it's a very different situation.
And that's something we definitely got to keep in mind, because we're talking about a $9 trillion balance sheet for the Fed. It was only around 4 to 4.5 the last time they tried this, and it took a lot longer to get up to 4.5 than it did to get up to 9 trillion, which is just almost hard to imagine the Fed's balance sheet being that large. But so that's why he was also saying when they do decide to do this, they're probably going to do it faster because they have to try to shrink the balance sheet down versus last time. And so it'd be interesting to see how the market actually digests that as well. But what I was talking about in the beginning was how this move was not just planned today to be moved up. I think a lot of people saw the stock market moving up today because of what happened yesterday in the afternoon. And if you missed it, what happened was the NASDAQ hit its 200-day moving average, but not only its moving average, it hit a key support level. And if we just scroll back, I can show you where it bounced off of this support level in a minute many times. But these indices tend to respect, moving averages, support levels. You can see right there, that's the support level. Bounced off many times over the last few months. And so, if you go back, if I scroll back through here, you'll see where the NASDAQ by itself has, probably done up to 20 different rebounds off of these moving averages. If you just scroll through, you can see when it bounces off of it, or just fades below it just like it did yesterday. But when it starts to hit the moving average, that's when you'll see a bunch of orders, a bunch of volume come in, as you can see, and start moving it back up because people are dollar cost averaging in. Plus, don't forget the computers control most of trading now. As you can see, roughly about 60 to 73% of all U.S. equity trades are done with algorithms. And I've even read up to 90% of crypto trading is like algorithmic trading. So, who knows? We'll see if this continues going into tomorrow. All I can say is, you know what? I'm going to enjoy the green day. Let's all enjoy the green day, because one thing we do know is going to be a volatile year and most likely a very volatile month. Don't forget the Fed meets this month as well, as he mentioned. So then you'll have that. Fed meetings coming out. Got CPI data coming out tomorrow, I believe. And so that is going to be a big number to digest. And we'll see what happens. A lot of people are projecting it to be like 7.5%. Who knows? We'll see. But I will ask a question real quick. Man, have you looked at how much equity is in your home? Like, I honestly don't keep up with it after we refinanced when the rates got below 2%. But my brother just happened to ask me last night. I said I hadn't looked at it in a year. I had no reason to. We're not planning on moving at all. And I'm not planning on trying to refi again, take any money out. But then he showed it to me last night, and I was like, that cannot be true. And when we sat and did the math in our area, we both live in the same area, it's like the equity in our houses are going up like 10 grand a month. Like, is that happening in your area? I mean, that's crazy, And I mean, it makes sense why I'm getting all these offers from Open Door and letters like every day saying, you got a lot of equity in your house, why don't you, cash out? And I didn't really know what they were talking about, because I just don't pay attention to that anymore now that I've refinanced and we're happy where we're at. So, and plus houses are so high, what am I going to do, buy one right now? It's like, no. But I'm just wondering if you looked at that, because that is just, it's insane, you know. And I talked to my real estate agent who sold us his house, and she went through the '08 bust and, you know, housing market crash, and she said, man, this is what was happening. Like, she was reselling the same house like multiple times. She sold one house 4 times in, like, I think 5 years, and each time she got between 100 and 150,000 more for the house within a year. And so, you know, you know, obviously this can go on for a long time, but I'm thinking, my Lord, you know, it's mind-boggling. Am I the only one sitting there looking at this stuff going, that's crazy? You know, this is, I mean, I live in a regular middle class, you know, neighborhood here. And so I just, yeah, it's mind-boggling. So yeah, I don't know, just let me know in the comments. I don't know, and what do you think about the housing market, and, you know, how much longer do you think these housing prices are going to continue to keep going up and up and up and up? And so I don't know, just discovered that last night, and I was just curious. Okay, guys. So hope you got something out of it. Hit the like, subscribe button if you did, guys, and I'll see you later. We'll see how the CPI data comes out tomorrow. Okay.